はい、皆さんこんにちは。マネックス証券のハッチこと岡本兵八郎です。本日はインベスコ世界厳選株式オープン、愛称が世界のベストの運用責任者であるスティーブン・アネスさんをマネックス証券にお招きし、いろいろとお話をお伺いしていきたいと思います。Stephen, congratulations on surpassing 2 trillion yen in asset under management.
Thank you very much. Well, thank you for your support for the fund as well.
The market has been very volatile this year, yet your Sekai no Best has a steady inflow,
Yes.
Which is wonderful. We'd like to explore the background behind this trend.
Okay, great.
So, Stephen, I heard you, the 5 years have passed since you have been the portfolio manager. And how was the performance and how did you manage the fund?
Well, look, we set the fund up, as you say, sort of 5 years ago to try and be an all-weather fund, to be able to perform in different environments. And I think what we're really pleased about is over 1, 3 and 5 years, the fund has managed to outperform the market. And if you look at the sort of Morningstar group that we're in, I think we are in the top 15% of funds across all of those time periods. And I think the number one ranked fund over 3 years. So that the strategy has paid off.
Specifically, which kind of stocks have contributed to the performance of your fund?
Well, I think one of the key things we try to do is be quite different to the market. And so if you look at what has performed well in the market compared to what performed well for us, it's quite different. And so I think the key drivers really of the global market for the last 5 years has been the US, principally the Mag 7 stocks. Whereas if you look at the performance of the fund, many of those stocks are not from the US, so companies such as 3i or Ashted.
One of the major characteristics of the fund has been its ability to make a return from stocks that differ from the market. Outperforming the market with a completely different stocks means that global equity team, your team, had a good judge. So could you please talk about your current portfolio?
Yeah, well, look, I mean, if you look at the current portfolio, again, it is quite different to the market, both in terms of sector and geography in particular. So if you look at some of the big positions in the fund, yes, we have some big technology companies in there. However, we also have big holdings from companies in Denmark, big holdings in companies that are listed in Hong Kong, and also, as I think we've probably talked about before, significant positions in companies in Europe and the UK as well. So the makeup of the portfolio is quite different, and that's obviously been a positive this year because we've seen quite a big dispersion in equity market performance.
So your Sekai no Best have no specific target number for sector allocation or regional allocation, but rather your outperformance is a result of the bottom-up picking.
Yeah, absolutely. That's really important. So it's very much a bottom-up driven investment process, and that drives the sector and geographical allocations of the portfolio. Now, of course, we're really careful when we come to risk management to make sure that we don't have a portfolio that is created from one particular factor. We make sure we have a diverse range of positions in the fund that will work at different times. And as I mentioned a moment ago, we specifically set the portfolio up to try and be all weather.
And last time you said that you overweight Europe, which turned out to be a success.
Yep.
Now you continue to overweight Europe.
Yep.
And how's your outlook for the European markets?
So look, I think this chart would help. So if you look at the performance of equity markets in 2024 compared to 2025, you can see that if you take an equity market such as the US, performed very, very well in 24, but actually this year has been a quite significant laggard and has performed quite poorly. Whereas if you look at Europe, for instance, had a really poor 2024 in relative terms to other markets, but actually is the only equity market in positive territory this year. So I think that chart just highlights what we were talking about, that there's been a big reversal in trends this year with the US underperforming and Europe and other markets outperforming. Well, look, I think there's been quite a substantial change, I think, in Europe in the recent past. And, you're starting to see a bit of a change in the approach to fiscal spending in Europe. And, we've seen that from Germany loosening the fiscal handbrake. And so there's a greater emphasis on infrastructure spend in parts of Europe. Clearly a greater interest in defense spending as well. And that's, I think, all of these things will help economic activity within Europe. And I think one of the criticisms of Europe in the past has been it's been frankly slow to do some of these things. And so Europe is in a better position than the US to bulk up fiscal spend. And so that should be quite positive. I think the other thing that's happened is actually, whilst there is a huge amount of tariff uncertainty this year, there aren't that many exports from Europe to the US. I mean, the auto sector is an obvious one, but outside of that, many companies aren't really impacted by tariffs. And so I think actually when you look at the relative earnings growth of some of those companies compared to the valuations, it still makes many European stocks pretty attractive in our eyes.
By the way, does your fund invest in Japanese stocks?
Yes, we do. Yeah, we've invested in a number of them in the past. We currently only have one, which is Itochu Corporation. Okay. My colleague Ed visited Itochu in December when he was here in Tokyo, and when we did more work on the company, we really saw a management team that were very good at capital allocation, a very clear framework for shareholder value creation through both M&A and buying businesses, but also through the sort of organic development of the company. And I think around 20% of the business is resource related. The other 80%, therefore, is in much more stable businesses. So we considered it actually to be, one of the more stable general trading houses. And then finally, look, I would also talk to the shareholder return approach that the business has, both in terms of the dividend growth, and share buybacks as well. So I think when you combine the management skill and execution with that shareholder value creation approach, we felt that was a pretty compelling opportunity. So we added to our holding in Itochu.
So the market has been very volatile this year, as everybody knows. How was the performance of your fund in this environment?
Yeah. Well, look, so in the volatility this year, the fund held up well and outperformed the market. And look, that's been similar to the prior periods of volatility that we saw. So if we take the summer of 2022 and the summer of 2024, both periods characterized by falling markets and fear of recession, the fund managed to outperform in all of those environments.
And how did you do that?
Well, I think it comes back to, we've talked about the sort of process before and talked about the focus on valuation. And so we try and work very hard on buying undervalued businesses so the valuations don't compress in tougher times. I think we also focus on businesses that have a degree of control in their growth and in their dividend income as well, and that tends to provide a slightly more support to the share price in tougher times. And what we don't do is just as important. What we don't do is pay for high growth speculation and sort of stories, which can often be overvalued in more bullish markets. So we just try to sort of be a little bit more considered in those markets and make sure that, as I say, the portfolio is all weather and can perform in different environments.
So could you tell us a little bit more about investment decisions you made in this environment?
Look, it's been a busy year. We've probably done more with the fund in 2 months, in March and April, and a bit of May, than we've done in years in such a short period. So I think, broadly we sold some of our defensive holdings, which had performed really well in February, March and April, and probably around 10 percentage points of the fund. And we allocated that to more cyclical areas of the market and more growth areas of the market where we felt valuations had come down quite significantly. And look, there were a number of opportunities because the tariff uncertainty was so significant, and there were companies where we felt that the market had become too concerned about the impact of tariffs. And so, an example would be a company such as Canadian Pacific, Kansas City Rail Line. They own the rail line that goes from Canada through the US into Mexico. That's a business with great pricing power, lots of non-discretionary trade such as grain. And we shouldn't forget as well that actually they transport goods outside of the US and within the US. So if tariffs were an issue and actually there was a success in bringing manufacturing back to the US, they'd actually be a beneficiary of that as well. So, the whole setup of the tariff uncertainty didn't just mean bad news for CPKC. It just meant perhaps you had to think through it a bit more deeply. But we also sold Apple, which is obviously a big index position. And we bought Apple, I think, last year. We made about 50%, and we just felt that the valuation of Apple was up with events. It's not a business that actually grows that fast. It's obviously a great company, but we felt the valuation was full, so we sold that. And look, we sold that before the whole DeepSeek shock happened in January as well. So that was another sort of example, I think, that helped protect the fund from some of the downside in the market and protected us from some of those big drawdowns.
So in a volatile market, investor sentiments tend to deteriorate. But the fact that the downside is relatively limited in your fund, it's a great point.
Well, I think this comes back to the kinds of companies we're trying to buy. We want companies that are really resilient companies run by excellent management teams that have very strong and robust cash flows that we believe they can grow those cash flows over time. And when we pay a sensible and attractive valuation and ideally get a dividend from the company too, those are the kinds of businesses that we think can perform in any environment. And I think, look, we're likely to live in a world of quite significant volatility for a period of time. And so I think there is a benefit to owning the kinds of resilient businesses that we're talking about that can withstand sort of macroeconomic shocks and grow significantly through the cycle.
Okay. Well, thank you very much for your update.
Thank you very much.
Very informative.
Great to be here again and hope to see you next time.
Certainly.
Thank you.
はい、本日は運用資産額2兆円を超えますインベスコ世界厳選株式オープン、愛称が世界のベストの運用責任者であるスティーブン・アネスさんをお招きしてお話をお伺いしました。この動画が皆様のお役に立てれば幸いです。最後までご視聴いただきましてありがとうございました。